Ladies and gentlemen, if you think you've seen silver move before, you haven't seen anything yet. Today, I'm going to show you why this moment in silver isn't just another rally. It's the biggest breakout story in history. And I'll say it again, mark my words, not tomorrow, not later this year, but right now, silver is positioning itself for a move that will shock the financial world. Silver is not just moving higher, it is accelerating. And that distinction matters more than most people realize. There's a huge difference between a slow grind upward and what we're witnessing right now. Expanding momentum, rising participation, and price behavior that signals something much larger is unfolding beneath the surface. When markets transition from accumulation to expansion, they leave very clear footprints. Silver is leaving those footprints all over the chart. For years, silver frustrated investors. It moved sideways, failed to follow through, and repeatedly pulled back just as optimism started to build. That long period of underperformance wasn't random. It was a base building process. Markets don't explode higher out of nowhere. They compress, coil, and exhaust sellers before releasing energy. Silver spent years doing exactly that. Now, that stored energy is being released. What makes the current move different is how silver is advancing. We're seeing strong, impulsive price waves followed by shallow pullbacks. That's the behavior of institutional accumulation, not retail speculation. When large money enters a market, it doesn't chase wildly. It steps in methodically, absorbs supply, and supports price during corrections. That's precisely what the price action is telling us right now. Another key factor is relative performance. Silver is no longer lagging, it's leading. When an asset begins outperforming other metals, and even parts of the broader commodity complex, it sends a powerful signal. New leadership changes are often the earliest indication of a new cycle. Silver is shifting from a forgotten asset into a market driver, and those transitions tend to happen fast once they begin. Volume also confirms this shift. Rising prices without participation are suspect. But rising prices with expanding volume tell a very different story. It means conviction is building. It means buyers are not just testing the waters, they are committing capital. That's how sustainable trends are born. Weak rallies fade quickly. Strong rallies feed on momentum, attracting more capital as price confirms the thesis. What's even more compelling is how silver is behaving around key psychological levels. Instead of being rejected sharply, price is consolidating, digesting gains, and then pushing higher again. That stair-step pattern is classically developed. It reflects confidence, patience, and a market that is comfortable at higher prices. Sellers are no longer in control. They are being absorbed. This kind of momentum doesn't appear at the end of a move. It appears near the beginning. Late-stage rallies tend to be erratic and emotional. Early-stage breakouts are technical, structured, and supported by rotation from smarter money. Silver's behavior fits the early-stage profile perfectly. That's why dismissing this move as just another rally is a costly mistake. We also have to consider the historical context. Every major silver bull market began the same way, quietly with disbelief, while most investors were focused elsewhere. By the time silver became a mainstream topic, the biggest gains were already behind it. Right now, sentiment is improving, but it is nowhere near euphoric. That's exactly where you want it when a true breakout is forming. Momentum indicators further reinforce this view. Long-term trend measures have shifted decisively upward, signaling that the dominant force is now bullish. Short-term pullbacks are being bought aggressively, not sold into. This tells us the market is no longer asking if silver should go higher, but how far it can go. And here's the critical point most people miss. Momentum is self-reinforcing. As prizes, it attracts trend followers, fund rebalancing, and algorithmic strategies that respond to strength. That additional demand doesn't care about headlines or opinions, it reacts to price. Once that feedback loop starts, moves become larger and faster than expected. This is why timing matters. The biggest opportunity in any breakout is not after everyone agrees. It's during the phase when evidence is strong but belief is still forming. Silver is in that phase right now. The charts are speaking clearly, even if the crowd is still hesitant to listen. This is not a prediction based on hope. It's an observation based on structure, momentum, and historical behavior. Markets repeat patterns because human behavior doesn't change. And the pattern silver is tracing right now is the same one that precedes some of the most powerful advances in market history. If you've been waiting for confirmation, it's already here. Silver isn't asking for permission anymore. It's moving with intent. And when momentum aligns with structure like this, the outcome is rarely subtle. One of the most powerful forces driving any market is imbalance. And right now, silver is facing one of the most persistent and underestimated imbalances in modern history. This isn't about a temporary shortage or a short-term disruption. This is a structural condition that has been building quietly for years. When supply consistently fails to meet demand, price doesn't just rise, it eventually reprices to a completely new level. Silver has now experienced multiple consecutive years where global demand exceeds available supply. That alone should raise eyebrows. Markets can tolerate imbalance for a short time, but they cannot ignore it indefinitely. What happens instead is inventory depletion. Above ground stockpiles get drawn down, refiners tighten allocations, and physical availability becomes increasingly constrained. Price is the mechanism that eventually corrects this, and it rarely does so gently. Unlike many commodities, silver supply side is extremely inflexible. New silver production cannot be ramped up quickly. Most silver is not mined on its own. It's produced as a byproduct of copper, lead, and zinc mining. That means higher silver prices don't automatically translate into higher silver output. Even if demand surges, supply remains largely fixed. This creates a pressure cooker environment where price becomes the only release valve. At the same time, demand is not just stable, it's expanding. Industrial usage continues to climb and investment demand rises whenever uncertainty enters the financial system. This dual demand profile is unique. Silver is both a monetary metal and a critical industrial material. When those two demand streams compete for limited supply, the result is not balance, it's conflict, and price resolves that conflict. What makes this situation even more compelling is how quietly it has developed. There's no panic yet. There's no widespread acknowledgement that inventories are tightening. That's typical at this stage. Structural deficits rarely grab attention until the consequences become unavoidable. By the time headlines appear, the move is already well underway. Another overlooked factor is recycling. Many assume higher prices will bring more recycled silver back into the market, easing the deficit. In reality, recycling responds slowly and inconsistent. Much of the silver used in electronics and industrial applications is not economically recoverable at scale. That silver is effectively removed from circulation. Once it's consumed, it's gone. This creates a one-way flow that steadily drains available supply. When markets face this kind of persistent drawdown, they eventually enter a repricing phase. Prices must rise high enough to curb demand, incentivize substitution, or justify massive capital investment in new mining operations. None of those adjustments happen overnight. They take years. Until then, the imbalance remains and price continues to trend higher. What's important to understand is that markets don't wait for shortages to become absolute. They move in anticipation, and traders, institutions, and manufacturers position themselves ahead of scarcity, not after it. That's why price often accelerates before physical shortages make headlines. The smart money recognizes the trajectory early and acts accordingly. This is where silver stands today. The supply-demand equation is no longer theoretical, it's measurable and persistent, and yet silver is still priced as if this imbalance can resolve itself quietly. History shows it's not how markets work. When supply constraints collide with rising demand, price resets sometimes violently. There's also a psychological element at play. Years of sideways movement condition investors to view silver as stagnant. That perception lingers even as the underlying reality changes. Markets exploit complacency. They move the most when the fewest people are prepared. Silver is benefiting from exactly that dynamic right now. As inventories tighten further, participants will begin to compete not just on price, but on access. That's when volatility expands and trends accelerate. We're already seeing early signs of this transition in how silver responds to pullbacks, shallow corrections, fast recoveries, and strong underlying bid support. That's not coincidence, it's pressure building. This isn't a scenario where balance returns naturally. It's a scenario where imbalance forces adjustment, and adjustments in markets of limited supply tend to overshoot. They don't stop at fair value. They push in tone behavior change. That's why this phase is so critical. This supply-demand story in silver isn't a future risk. It's a present condition. The longer it persists, the more dramatic the eventual resolution becomes. Price is simply beginning to acknowledge what fundamentals have been signaling for years. This is how major breakouts are born, not from hype, but from imbalance that can no longer be ignored. Silver is undergoing a transformation that many investors still haven't fully grasped. For decades, it was viewed primarily as a monetary metal, a quieter cousin to gold, moving largely on sentiment, inflation fears, and cycles of risk-on and risk-off behavior. That perception is now outdated. Silver has evolved into something far more critical, and that shift is fundamentally changing how this market behaves. Today, silver sits at the center of the modern technological world. It is no longer optional, it is essential. Its unmatched electrical and thermal conductivity makes it irreplaceable in high-efficiency system. Solar energy, electric vehicles, advanced electronics, medical technology, data centers, all of them rely on silver. This is not cyclical demand tied to luxury or speculation. This is structural demand tied to global progress. What makes this especially important is that industrial demand for silver does not respond to price the same way investment demand does. Manufacturers don't stop producing solar panels or electric vehicles just because silver becomes more expensive. They absorb the cost, pass it along, or secure long-term supply contracts. In other words, demand remains sticky even as prices rise. That creates a powerful floor under the market. The green energy transition alone has changed the silver equation permanently. Solar panels require silver for their conductive properties, and global solar deployment continues to expand year after year. Governments, corporations, and utilities are committed to long-term energy transformation. This isn't a trend that reverses because of short-term economic weakness. Infrastructure build-out span decades, not quarters. Electric vehicles add another layer. Each EV uses significantly more silver than a traditional combustion engine vehicle. As adoption increases worldwide, silver demand grows alongside it. And this isn't isolated. It compounds with demand from charging infrastructure, power grids, and energy storage systems. Every layer of electrification pulls more silver out of available supply. Then there's technology, data centers, AI hardware, 5G networks, and advanced semiconductors all require silver for performance and reliability. As the world becomes more connected and more automated, silver consumption rises quietly in the background. Unlike consumer trends, this demand doesn't get headlines, but it steadily drains inventories. What's crucial to understand is that much of this industrial silver is never coming back to the market. It's used in tiny amounts across billions of devices, making recovery impractical. Once it's embedded, it's effectively gone. This is not a recyclable loop. It's a one-directional flow from supply into permanent use. This is where the traditional silver narrative breaks down. For years, price action reflected monetary cycles more than industrial necessity. That is changing. Industrial demand now competes directly with investors for the same limited pool of metal. When that happens, the character of the market shifts. Price becomes less sensitive to sentiment swings and more responsive to availability. Another overlooked point is substitution. There is no real substitute for silver in many of these applications without sacrificing efficiency, durability, or safety. Copper doesn't perform the same. Aluminum can't replace it in high-precision environments. When substitution isn't viable, demand becomes inelastic. And inelastic demand paired with constrained supply is a powerful recipe for long-term price appreciation. This industrial transformation also alters volatility patterns. Instead of sharp spikes followed by deep collapses, markets with strong industrial underpinnings tend to a trend. Pullbacks become buying opportunities because end users step in to secure supply. That stabilizing force didn't exist in past cycles to the same degree. It does now. We're already seeing evidence of the shift. Silver's pullbacks are shallower, recoveries are faster. The market behaves as though there is constant underlying demand because there is. This isn't speculative froth, it's real world consumption meeting finite resources. The biggest mistake investors can make is analyzing silver through an outdated lens. This is no longer just a hedge or a trade, it's a strategic material. Markets eventually reprick assets when their role in the global system changes. That repricing process doesn't happen all at once, but once it starts, it tends to persist. Silver's industrial evolution is not a future possibility. It's already here. The demand is locked in, the applications are expanding, and the supply cannot keep up at the same pace. That imbalance doesn't scream for Fen, but it exerts constant pressure. This is why silver's next phase isn't about excitement or hype, it's about necessity. And when a market becomes necessary to the functioning of the global economy, price no longer asks for permission. It adjusts until the system can operate. That's the kind of foundation that supports historic moves. What makes a breakout truly historic is not just momentum or demand. It's when multiple catalysts converge at the same time.